All right. Good morning, everybody. Running just a few minutes late. The the new cat is going in to get declawed today and kind of messed up the whole morning thing. No worries. Be just a second. All right. Good morning. Good morning, everybody. I think we're all here now. All right. So as we usually do, if you're new to all of this, the idea behind these morning briefings is to get you to a point where you can fish for yourself, right? That I'm not trying to give you a fish every day. I'm trying to teach you how to do it. So the first thing we want to do in the overnight hours while we're sleeping, markets are open around the world. We want to check on them when we get up. Anything important happened in the overnight hours, we want to check global news, not just our own news. Right? One place you can do that for free is Koifin. Go there. They've got these tabs across the top under markets. So you can check world economies, macro, industries, corporate events, blah, blah, global markets. Right? Just keep your eye on the side because it doesn't differentiate between different days until you look at the time on the side. So, you end up scrolling and you're looking back days ago. It's usually just one or two, maybe three headlines. Check it, make sure that there's nothing extreme. You'll know, right? Like when that ship got stuck in the canal and it was a really big deal, you knew there was no maybe about it. So, don't invent a problem that isn't there. You're looking for a really big issue. Very likely you won't find one and you move on. But another thing that's worth looking at while you're moving on is the finance juice. We're trying to figure out on a day-to-day basis who's who's going to be speaking today. So there can be European central bankers, Fed speakers, ex-Fed speakers, and this list on the side will kind of fill you in. And you can see for today, it doesn't seem like we have a lot of people speaking, but um, there's one central banker speaking at 2:30. That's it, right? This also will very often have this European market wrap. So it'll give you a summary of what happened in the overnight hours or what's happening right now in Europe, which is really good. If they have bad job numbers, if they raise rates, or they have some bad economics, this would be a place where you'd hear about it. It's also a place where you'll often see if tech did really good last night in Europe or real estate or whatever sector did good there is likely to bleed over here. So it's a nice little heads up on the day. Again, you don't have to be signed in. It doesn't cost you anything to have a financial juice account. So once we take a look around and we make sure that nothing extreme or drastic is going on, bring it into Thinkorswim, go to Market Watch. If it looks like this and you just got a bunch of junk everywhere, turn everything off. Turn on Econo Day event, put the description next to the clock, and you can see that 10 o'clock today, we have some econ, and that's it. So this is pretty good. All week we've had a lot of people talking. There's been, there was this festival that was going on that was hosted, and some really big name speakers were out there chipping their teeth. So we had that interference going on while at the same time we've had our regular econ coming in. So today's like a laid back day, none of that, right? Which is totally awesome. We're basically free and clear by 10 a.m. And whatever we're going to have for the day will be mostly based on whatever we have on the chart, the candles, and not some outside influence. So a really light day. It is OPEX day, so be very careful about that concept, right? You may see additional elevated levels of volume today, but that doesn't necessarily mean anything. The institutions have been exiting out of a lot of their trades and getting back into the VIX, right? So they got rid of a lot of those puts that they were holding, which was their hedges. Now they need hedges again. They're getting into the VIX, but with OPEX today, with everything expiring, we want to be looking for where they're going next, right? And they can't do it all in a day. A lot of those bigger institutions, they don't move everything all at once. They would have already been doing this, and we're not seeing it. It's not in the flow. So something to keep in mind. We do have an additional market maker move today. So when we're looking at the ADR, we have to take into account the market maker move. So we have an ADR of 3. We have a market maker move of 0.8. So that's a 3.8% move that we could have today, and it would not even be considered extreme. It's important to grasp that logic. We also want to keep track of where are we at with the weekly expected move. You can see that we left the weekly expected move yesterday, and we came back inside the weekly expected move today, or in the overnight hours. This line here is my hand-drawn calculated weekly expected move line based on last Friday's numbers. Rather than letting the indicator do it, which is this line way up here, this is the expected move that the indicator drew. The indicator doesn't do as good a job as a human does. You can see how far off these are. This is what the machine said our weekly expected move was. This is what my hand-drawn weekly expected move was. Big difference. About 50 points different. So what's our expectation for today? Well, there's only 3 things that we can do. Stay sideways or expand. I was really excited about yesterday. If you look at the SPX, we opened and closed within 1 point of each other. So we had a sideways day, and that implies that rounding that we've been talking about the other day, and say we were in the Nasdaq when we were talking about this. Right? You use your regression line, start at the top, drag it across. And in the Nasdaq yesterday, we were talking about we need something like a double bottom, or we need to get a higher low so that we can begin to turn this sine wave over and begin running back up the other way. It would form a large cup and handle, basically, or at least a large cup. Don't know if it'll have a handle or not. And to get that, we had to get some sort of basing pattern. We had to stop getting lower lows. We got that yesterday. Yay, it's a good start. We don't have the follow through yet, right? Because if we were only looking at something like that, well, we had the same thing here, and we had the same thing there, and there, and there, right? And all of those failed. So here we're in the same situation. We don't know if it's going to fail yet, if this is going to just roll over and continue to give us these lower highs, or if we're going to roll over and continue to base, or if we're done for a little while at least and begin to move back up. One thing that I found very shocking is if you look at the weekly chart of the S&P and the Nasdaq, look at that. I'm on a weekly chart and you just count back the weeks. It's been nonstop. It's very rare to see a market continue in a single direction for this long, especially in the Nasdaq and in the S&P. So that sentiment that I've been seeing out there, oh, is it time to buy the dip? Haven't we gone far enough? Surely we're going up from here. That's a fallacy, right? Most of the time when we've moved this far, we'll go the other direction, at least for a little bit. But it doesn't owe us that, and we have to actually wait for it to begin. Now, you can jump in early. I'm a big fan of getting into things early without waiting for confirmation because you make more money and you have less money at risk. Just keep in mind, without any confirmation, you also will lose more often than the person who waited, right? So there's consequences for every choice. If you wait and get the confirmation, you'll lose less often. But this isn't a game where we're keeping track of winning and losing. This is where we're trying to make money, and you'll risk less and make more if you get in early. You'll just have to contend with the idea that you will lose more often. So keep your losses small, increase your wins as much as possible, and try to juggle the decision process between these two. So what can we do for today? We can maintain our really tight range from yesterday, which would be kind of cool. That'd be a great start. It's yesterday's low to our own Globex high right now. It doesn't owe us any more than that. And there's a lot of expectations that this is all we're going to do. That is a very narrow range. So what else can we do? If we break through the top of this, we're going to look to reclaim yesterday's levels, starting with yesterday's open as our target. Not yesterday, Wednesday, excuse me. So Wednesday's open will be our target to the upside. If you are wondering if that's too far away, look at where we opened last night and measure the ADR, 3.5. Well, remember, we have an ADR of 3 with a market maker move of 8.3. So we can go 3.8 and it would not be extreme. That's only 3.5. It's within our boundaries. It's in our reach. We can do that. That would be my upside target. 40-40, basically. To get there, we're going to need to get through our own Globex high. And this is something that I want to talk about real quick. We still have time, so this setup may go away before we actually open. But when we go into the open with this shape, where we've gapped up in the overnight hours, we set a high and we pulled back off of that high and we're coming into the open. If we're in this scenario as we come into the open, one of the things you really want to be concerned about is everybody's bullish because we've been gapped up and running up all night long. We open and we try to continue to run that gap. It hits the highest resistance point in the Globex and then it dumps on you. By the time it does that, it's usually 30 minutes into the day. You've already started buying calls and a bunch of things. You're trying to get long and it just runs you right over and dumps down for the rest of the day. That sucks, right? Scenario 1 would be that it hits yesterday's high and then dumps on us. And 2 would be that it hits the Globex high and then dumps on us. Either one of those, it sucks, right? And the dump usually comes by 10, maybe 10:05 at the latest. It waits until you just get primed long and then crushes you. So be careful of that setup. And if you want to know more about it, go back and look at other days. All of these days repeat. They're very exacting in their nature. This little setup is a setup that I've seen before. And if you go look for it, it'll be a setup that you've seen before. All right, go back and look at what I'm talking about. You'll see examples of it. So be aware of that as we come into the open. We've still got a few hours, so it's very likely that this entire thing will be gone and we'll be looking at something else. But just in case, we've now talked about it. So we've talked about the upside move. We talked about being range bound for the day. The third scenario, which is not off the table, is that we retrace the gap up from the overnight hours. We break through yesterday's low. We break through the weekly expected move low, and we continue that move to the downside. The questions we want to ask is it within our ADR? So from the close, 3.8 to the downside, you're looking at 37.50. That's a significant drop to the downside, 37.50. We could move that far and it wouldn't be considered extreme or unusual. It would be normal, be okay, it's average. When we're speaking of average and we're talking about normal, how far away from the moving average we are is something worth considering. So we're on a 1-year daily chart. How often has the S&P been this far away from its weekly 10-period moving average? We haven't, right? For an entire year, we have not been this far away from that 10-week. And it's very likely that we're going to turn around and go back towards the 10-week, or that we will hold these lows and wait for the 10-week to get caught up with us. It doesn't have to be one or the other, right? It can pause and slowly begin moving back to the 10. But either way, pausing and waiting for that 10 or moving back towards the 10, because the 10 is the center point. It's like the middle of the basketball court or the middle of the football field. Everything starts in the middle, right? So with that analogy in mind, we're on the edge. We need to come back towards the middle. Price does do that, but that's the 10-week. So let's flip this over and say, what's the 10-day? And as you can see here, which is going to be the catalyst for today, we're not very far away from that 10-day moving average. And on a day-to-day basis, how far away we can expand away from the 10 without, quote, moving too far, we've got plenty of room. We're only 1% away from the 10-period moving average. And the extreme has been 4.5. The average seems to be around 2.5. So we have plenty of room that we can run away from that 10-period moving average. And it would be to the downside in this discussion because we are already underneath the 10. So when we think about, have we gone too far, too fast? This is a really good way to answer that question. No, we have not. There's still plenty of room that we could move to the downside. So we want to go in and check the volume profile. Notice how wide it is today compared to how wide it was yesterday. Yesterday, I mentioned it was significantly narrow. Today, it's much wider. We're also back inside the box. When we're in the box and we're at the high of it, we believe that we have nowhere to go but back to the bottom of it. And when we're at the low of it, we think that there's nowhere to go but to the high of it. Well, we're at the low of it, so we anticipate going back to the high of it. It doesn't owe us that, right? So keep that in mind. I'm not telling you that we're going to go up because we're at the bottom of the volume profile. I'm just pointing out that we are at the bottom of the volume profile, and the expectation is that when we're at the bottom of it, we travel through it. To get there, to get to the top, we have to get through the point of control, which is at 4011, basically, the cog line, right? The center of gravity. There's also no real volume resistance to get there. It's a nice shallow area. We can move through shallow areas really quickly. There is a anchored VWAP, 39.94. Here we're looking at a 5-day, 5-minute chart. And each one of these daily has the volume profile on it. What we're looking for are any values that we need to carry across. Now, generally speaking, they say that we can bring over the value area high and the value area low. I've never really found any validity to that. I get no assistance or help when I do that. So I don't really subscribe to that concept. The one that I'm more interested in carrying forward is the point of control. But I only carry them forward until they've been hit, right? So we would have carried this one forward. And then when price hit it, that would be it. We would be done with it. I know a lot of newer traders focus on today's point of control. They'll focus on what we have right now. And there's nothing wrong with that, right? Just keep in mind there's more to it than just this. All right, so looking at the NASDAQ, same scenario, same walkthrough. Three things that we can do: maintain the range, break to the upside, break to the downside. The range that we would maintain is our own Globex high and yesterday's lowest value. That's a really tight range. We held it yesterday. We absolutely could hold it again today. It wouldn't surprise me if this stays on the table. Yesterday's volume was eerily light. We're going into the weekend. There's no expectation that anybody wants to start new positions or hold into the weekend. It's OPEX. So, there's going to be a significant volume increases on the closing side of things. Anyways, my expectation is that we would go to the downside just because nobody's going to want to hold anything. But if you've been short, how do you get out? You buy to close, right? So looking at it from that point of view, if we're talking about seeing a lot of people close today, trades that they're holding, if they've been holding shorts, they're going to be doing a lot of buying today, not a lot of selling today. So flipping that entire script over, arguing it from the other point of view, we could see some significant buying today. Keep in mind, the market makers buy stock to get back to delta neutral when they trade a lot of options, right? If you want to buy a call, they sell it to you. Now they've got a negative delta. They need to get back to delta neutral. They'll go buy stock. Well, once that options trade is closed, they no longer need that hedge. They no longer need those extra delta. They'll sell the stock. We're getting a lot of options that are going to close today. Now, when it comes to OPEX, I did post a nice little article because somebody was asking about it the other day. So if you go to after hours, you'll see a little article that I went and grabbed. I didn't write this. I just copied it. And I posted the links to two different articles that follows up on what is OPEX and how can it or what should we expect for it to impact our market. It's in the after hours, so you know where to get it. So if we take range bound off the table, what do we got? Wednesday's open would be my next target. If we break out of this range, then we have an inside day breakout. 12,368 would be the target to the upside. We've got an ADR of 4% and a market maker move of 1%. That gives us a 5% move on the day. And remember, Some of the biggest moves to the upside that we've ever had in the history has been during bear markets. So we could absolutely make a 5% move to the upside today. And a 5% move would get us really close to Tuesday's open. $12.5 or near that. I'm not saying we're going to make a 5% move today. I'm saying we can, and it wouldn't be extreme. Of course, if we do make a 5% move today, it's going to look very similar to Wednesday, but the other direction, right? You want to know what that looks like? Flip it over. It would look a lot like this. It will be very extreme, very aggressive. Everything will be lit up. Tick, trend, AD, market breadth, UVol, DVol, everything will be lit. The sectors, MOT, it won't be subtle, right? Because most of the day, or at least half of the day, is already done. So if we're going to make a 5% move, this thing better get on the stick and move, right? So that's the upside scenario. What's the downside? Well, we would first have to get through our own Globex low, yesterday's open, yesterday's RTH low, and then yesterday's low, and then wide open spaces. Start from the close, run it to the downside. What's a 5% move look like? 11.3. Nice round number. So that's our downside target. And remember, that's not the edge of our target. That's just what a normal move would look like today. We could go well beyond that value. If we went that far, it would just be normal. So we are a bit up, 1.5% here, over 1% in the S&P. What's our expectations for today? What should we focus on? So keep your eye on the bonds and the dollar. Let that VIX be a little bit of a guide. Watch energy and Bitcoin. This little grid is a nice heads up, just kind of keeping track of what's going on in the market. Remember, it doesn't matter what you trade. You don't want to trade it blindly. So Apple, Facebook, Tesla, whatever you're trading, you still got to keep your eye on what's going on around the market. If we're going to get bullish, you'll need at least one of these two, finance or technology. Think about the names that make up finance or the names that make up technology. Follow those sector ETFs down. These are the greatest weighted names inside this ETF. So if finance is doing good, these names are likely to do good. Use the market breadth today to kind of get a gauge for how aggressive or how strong the market is moving today. Yesterday, it was really muted. There just wasn't any real follow through to it. And it didn't let us down at all. There was just nothing there. We kind of hung out around the zero line quite a bit. The ticks yesterday just kept crossing back and forth above and below the zero line, indicating exactly what we already had on the chart, but validating what we already had on the chart too, that there was nothing there. So good confirmation yesterday in the market breadth, just because there wasn't anything there. All right, so we're looking at the S&P 500. We want to knock this down to pre-market. We want to filter it down to 100 names. That's pretty close. Close enough. Give it a color adjustment. And now you can see all the fangs are lit up. The MOT, the monsters of tech, are the biggest boxes on the screen. Microsoft, Google, Apple, Facebook, Amazon, Tesla, right? There are some other big names by market cap. They just don't fit the sector that we use for a risk on sector, right? Healthcare is the number 2 sector inside of the S&P. It's the second largest sector, let's say it that way. But healthcare is not what we focus on in a risk on day, right? So things like United Health have weight behind it, but they're not our go-to for risk on. So we got the fangs, we've got energy, finance. Finance is really well lit today. When we're taking a grasp of things like this, we want to be a little more nuanced. What kind of finance? What kind of energy? Because that little blanket statement of, oh, energy, well, which one? For the Nasdaq 100, we don't need a filter. Keep it on pre-market. Give it a color adjustment. Now, one thing that I like to do is see who's not playing with the group. So if we're looking at the chip names, for an example, Texas Instruments, AVGO, they're not playing with their peers. Now, they may be brought in eventually, but I would want to go and check them out more and see why they're not playing with their peers and if there is an opportunity to deal with this arbitrage. Now, on a day like this, when we're up in the pre-market, I like to be able to quantify how bullish are we. We're looking at the S&P and we're asking a simple question: how many names in the S&P are up at least 1%? 30. Okay, 30 is not bad. It's still early. It's only 8 o'clock. We got an hour and a half. Between now and then, I want to see this number get a lot higher. As we come into the open, 50, 60, 70 names that are up at least 1%, that's an aggressive bullish open. I'll be much more convinced that today can be a trend day if we have that strength before we open, not after we open. I want to ask the same question out of the Nasdaq. How many names in the Nasdaq are up at least 1% this morning? 38. So 38% of the Nasdaq this morning is up more than 1%. Now we can knock that number back, something like 0.5%. 43. That's not enough. If we're going to come into the open, break to the upside, and rip to the moon, because we have the opportunity for a trend day today, then we have to have those numbers pick up. Now, for those of you who haven't gone through and heard the phrase yet, a trend day is a specific thing. It's not like we point to something and say, oh, look, there was trend here. Yeah, that's trend, but that's not a trend day. This is a trend day. And it wasn't because it ran all day that made it a trend day. It's what happened to it. It left the Globex range. It left yesterday's range. And it ran. So if we quote trend from the high back down to the low, then it's not a trend day. If we go from the low back up to the high, it's not a trend day. We have to get outside of yesterday's price action, either to the upside or the downside. And even then, that doesn't automatically make it a trend day. We just can't have a trend day unless we're already outside of those ranges, or we open and then break through those ranges. So if we come into the open and we get outside of yesterday's price and we begin making a move to the upside, we have the capacity for a trend day. The reason it's important to be able to classify or quantify or make a statement that says it's a trend day is ask yourself how much you got to trade out of this the other day. How many of you were scared and said, well, it's already moved so far. No way it's going to continue to go now. And I'm way too late. I can't get in it. Or you got some of it. You locked in gains. You got out. It kept going. And you thought, man, I want to get back in, but now it's already gone too far. Or I should have stayed in. Why did I get out? Look how much farther it's going without me. That sucks. But when you have more confidence to be able to get back into the trade, when you have already validated or verified that it's a trend day and that yes, you can get back in, do it again. Don't stop now, right? Get another bite of the apple. That's why it's important to be able to do that. Even better than all of that is the idea that we can identify it's going to be a day like this before it's a day like this, that we can call it in the pre-market and say, hey, today's lining up to be a trend day. And we have a checklist that says if this, and then this, and then this, we're very likely going to have a trend day. With 80 to 85% accuracy, you can identify that it's going to be a day like this before the day even starts. So we have the capacity for one of those today. There are 4 different kinds of trend days, by the way. This is a full trend day, but there's a half day reversal, there's a trend day through the morning, and then there's a trend day in the afternoon. So an afternoon trend, a morning trend, a full-on trend, and a trend with reversal called a midday reversal or a rounded reversal. Those 4 make up the 4 different types of trend days. So how many names in the S&P have moved at least 0.5% to the upside this morning? 52. Now that's a good number. That's a good start. We're getting behind the right names here, right? And we don't have to go out and ask, well, which ones? Because if we're lit up, if we're going to be bullish, everything is going to go, right? Really high correlation market efficiency. The other day to the downside, we had 92 to 93 names all moving in the same direction to the downside. If you were looking at the S&P 100, there was only 2 names that weren't going down, right? So you didn't have to get real picky about which name you wanted to short the other day. You could have just picked any of them. They were all falling. This is the ADS-PD. It's the advancing versus the declining issues in the S&P 500. How many are advancing versus how many are declining? Same thing with the Nasdaq, ADNDD. So when you look at this thing and it's pegged out, like it was the other day, sitting at its extremes, or the day before that, sitting at its extremes, makes it very clear, very obvious. So if we're going to get bullish, we want to see that extreme, right? 8 out of 10, 9 out of 10, all moving in the same direction. All right, the sectors today. If we maintain our bullish stance, we should have all the sectors in play, but there's risk on, risk off, and midline sectors. So we want to look at what's not participating yet, and then recognize some of these that probably just haven't had any trading yet. Things like cloud computing. So we just kind of discount that one because it doesn't have the liquidity this morning. We can see the bonds are down, natural gas. This one is another one that very likely hasn't had any bid yet. So no surprises in the sectors. And then for what's up this morning and what's up the most, consumer staples, banking, semiconductors, technology, energy, Bitcoin, emerging markets. None of those really do a good job of breaking out newer sectors. So look at the pot stocks, all well lit. Be thinking about it from the point of view, what if we flip over and start to dump, right? We're sitting up at the highs. We're gapped up. We have every expectation that we could sell off today. Really be thinking about which one of these you want to run down into the dirt. Which ones have run the most this morning in the pre-market? Don't just be thinking about all the bullish ways that you can trade today. Everything is bullish. Everybody's bullish. Everybody's in this happy exuberance this morning. Take the other side of the coin. Continue to look for anything that's telling you we're about to roll over and dump it down. Wouldn't be the first time. All right, so we want to take a look at crypto. Crypto's up. When we look at something like crypto, we got to think about what are the names that we're looking at. Are these heavily vested in blockchain, or do they actually have a lot of coin, or are they coins that are in the list? EV market. All of those are up, and the only ones that are flat are more of these really low volume markets, right? So probably just haven't had any bid today yet. Now, one thing to be focused on today is any red to green, IX10, inside day, R2G, TRB, any of your daily chart trend line plays, right? When you find the names on the list that you're interested in trading, take them out to their daily chart and consider what the opportunity is going to be. So yesterday, for an example, Apple closed in the low. This gives us a red day. We're gapped up in the pre-market. This gives us an R2G setup. But if we were in an R2G setup while we were also in an inside day setup, while we were also in a trendline breakover setup, then we would be talking about a TRB with an R2G, maybe even an IX10, gapped up in the pre-market looking for a topside breakout. Now, on this day, we weren't gapped up in the pre-market, so no one was looking for that opportunity, right? But the reason we focus on IX10 and compression is look at the size of the day when we finally left that range. Sure, it was bearish and it went to the downside, but it could have just as easily been a big day to the upside. So Apple, for an example, is a red day. We're gapped up in the pre-market. We're very likely going to open at least as high as yesterday's open. Maybe better, we'll open higher than yesterday's entire day completely. And we want to start thinking about how far can this thing go if we stay bullish? What's in our path that may show it, slow it down or stop it? Is there anything else that I could trade rather than Apple if I don't like Apple's beta? Some of the biggest movers out there, right? Amazon, Tesla, Google, those suckers can move. By doing this, you can narrow down your watch list so that you're not trying to look at 30 names going into the open, that you can focus on 2, maybe 3 really good names that suit your cost value, your liquidity ratio, and maybe that you can trade more than one of at the same time, right? Because if you trade something like Google and it takes all your buying power and then Google doesn't work, well, your SOL, you've already spent all your buying power. That's what I got for you guys. I'll see you at 9:15 in the main chat room for the live stream. Have a good weekend, everybody.